Good evening, traders. What a hell of a week it was. On the verge of a breakdown at the beginning of Monday's trade, and we closed Friday above 25,000 and now on the verge of a breakout. I think it's been a month and a week, which is like 5 weeks of utter frustration, oscillation. Direction wise, we have not gone anywhere. Momentum wise, we have lost quite a bit. Frustration, all time high, I'm pretty certain. So let's do our usual weekly drill, shouldn't we? We should take a look at the Nifty, take a look at the sectoral charts. Let's take a look at the RRG graphs as well. And as always, focus on your preparation. And let's figure out how and where should we position ourselves for the week ahead. Come, let's take a look. All right, so let's begin with, of course, the Nifty 50 index. I'm looking at the Nifty futures. I have the 3 time frames. The monthly on my left also makes a little bit of sense because we are now almost coming close to the end of the month of June. Weekly on the center and the right one is the daily time frame. My usual indicators is the next plus price and RSI, and a new addition to our indicators has been what I like to call is the state of flow. State of flow, positive or negative, essentially gives me a sense of the quality of that particular state. Is it a strong down or a strong uptrend? So step number 1, the monthly still seems like a bounce back. Trend is reversing, momentum seems to be flattish. Weekly is more well placed with the trend momentum sync and going through a 5-week crazy choppiness consolidation. I don't have any state of flow, whether it's a very strong uptrend or downtrend. Not really. It's still a very much a customary bounce back. Daily is, as you can clearly see, is very, very choppy. The state of flow, which was almost going negative last week with Friday's big 300 points, has again gone off. So still very much a range bound choppy market on the daily time frame. Direction wise, of course, there is no clarity. Momentum wise, it was down, up, down again. So it's very difficult to take a call unless we get a confident breakout above the previous fractal highs or a confident breakdown below these lows. My guess is as good as yours, but I would like to not, have any directional bias from the daily time frame. If I go from the weekly, clearly it's a bullish chart and I should be looking out for a breakout. So I'm not completely cut right through the center of a 50-50, but I would say 60-40, 60% more for a positive, breakout on the upside, and 40%, you never know, with the market anything can happen. The small and mid caps are doing relatively better. I have said this in my previous videos that the mid cap index came very close to its respective all-time high, which was same with the small cap. Now, the finance, the BankNifty, the private bank, these sectors went a lifetime high few months back. The mid cap and the small cap have come very, very close to their respective all-time high. And this is not a bear market. This is not a weak market. Or else the pocket of the market which enjoys the maximum weightage will not be at its all-time high, right? So it'll be difficult to create a really bearish scenario just out of the geopolitical tensions that's going around. If I consider myself to be a complete caveman, trading from my cave, I have no idea what's happening in the outer world, then just by looking at price, not bearish. I won't say it's table thumping bullish, but it's definitely not bearish. Coming back to the CNX Midcap, monthly, pretty, not bad at all. Very, very good looking sync on the weekly, and I have my state of flow on the positive side. The state of flow was on the positive side. Off late, it has given off because of the trend reversal and the momentum shift. So daily chart is weak. Weekly chart is very, very strong. It's better to stick with the weekly charts view, which is bullish, and I would, go for more of long trades when the daily chart reverses. The daily chart is about to reverse, hopefully. CNX small cap, similarly close to its all-time high. takes a breather with an HAGB last week. Monthly charts looking very, very pretty. Weekly charts again well synced with the trend being on the upside. Daily charts is sinking a little bit. What it is going through is a retracement after the recent one-way rally, which is a very natural phenomena, and these kind of charts should not be jumped into to go short. So I would strongly suggest, wait out and don't look for, shorting opportunities at this juncture. Wait for both the small and mid caps to probably hold some grounds and turn around, which means if I go by Heiken's language, I would like to see an Heiken Ashi with an upper shadow, preferably a positive Heiken Ashi with an upper shadow. Okay? So small and mid caps looks fine. Let's now come to the sectoral charts. And for that, we always use the RRG graphs using the strike analytics. Let's go to the RRG graph section. First, I'm gonna tick off the most of the sectoral, as in broad-based indices like 50, 100, 250, 400, select and all those. I'm going to just take a couple of minutes from you and tick off these guys and focus on the core sectoral charts, which makes up majority of the Nifty 50. I think that's more or less it. First, Nifty 500 as the benchmark. Second, time frame to weekly. And count, let's increase it to something like 12, which will give us an understanding of 3 months RRG behavior. Sort it out in terms of percentage change, and we will see that within the leading quadrants, we have the PVTBANK and the oil and gas. Starting off with the oil and gas, it is in the leading quadrant, but it has been losing vertical distance. That is, it has been losing momentum of relative strength. Now we have oil and gas. We also have, I think, the Nifty energy and oil and gas. If you take a look at the top 10 names, you probably will find 5 to 6 of them overlapping. So both of them will most of the time behave similarly. This guy is also traveling left to right, which is gaining relative strength, but up to down means losing momentum of that strength. Nifty energy, oil and gas, their RRG graphs are telling us it is an outperformer. It is gaining relative strength. If you get long triggers, you can go with the long trades. If you get short triggers, if they show you signs of weakness, it's better not to short them. This is the meaning out of the RRG. Is that what we see on the price? Let's start with Nifty energy, CNX energy. Monthly charts, of course, 2 months of bounce back. That's not a problem. It's the weekly charts which is looking very pretty. Our trend momentum indicators are very much in sync, and we have a setup which we like to call thunder long setup, which means that any move above last week's high, it should pick up momentum. So it's a bullish weekly chart. Daily chart has been cooling off. So it's going to be a conflict between the weakness from the daily and the strength from the weekly. And probably that's going to be the case with most of these charts. We saw that in the mid cap and the small cap. So it's going to be an important week or weeks, couple of weeks going forward. Hopefully we will get that breakout. So from the daily chart, should you go short? The answer is no from the charts. The answer is no from the RRG graphs. From the daily chart, if the daily chart reverses and gives me a bullish, solid bullish Heiken and my momentum turns positive, etc., should I go long? From the price chart, the answer is yes. From the RRG graph, the answer is yes. So I would mark it green, and CNX energy should focus on the long side only. The sad part of this analysis is after a couple of weeks, 2-3 weeks, if we see these charts down here, right? On the hindsight, when we look back, that listen, when you created that video, you said not to go short, but the damn thing fell like 10% and we missed out. That's the choice. So I'm going with the, let's say, the principle of following what my weekly charts is telling me, and I'm going to stick to it. I'm going to look for shorts when my weekly charts, let's say, deteriorates. Okay, it's a principle, it's a choice, it's an assumption, it's a foundation. I may go wrong, but I'll also go right at times. So energy, bullish. The other sector which is there in the leading quadrant is the PSU Bank. The PSU Bank off late has been doing pretty well, you remember. But the last couple of weeks, it's been losing a bit of that momentum. Again, the RRG graph is a bullish one, which is slowing down. Look for long setups. Do not short this index. That's what the PSU Bank tells us. What's the PSU Bank's RRG graph tells us. If we take a look at the CNX PSU Bank, pretty good looking monthly charts, improving, very good looking daily chart. And interestingly, with last week's close, I have a positive state of flow, which is a sign of strength. So principle wise, weekly chart strong. I won't be looking to go short from the daily. Daily, again, same story, a bit of a trend reversal with the momentum shift, and it's got an HAGB, so it's weakening a little bit. If I zoom out, I will find some polarity kicking in, which is the previous highs. That's where exactly the Nifty has created a low, so previous resistances can act as support, so it doesn't make sense to short this. Go with the RRG graphs, go with the principal weekly chart, and I would suggest that look for long opportunities when these charts reverse. Same logic, PSU Bank. Okay, going back to the RRG, from leading, let's go to the weakening. And, sorry for that. For the weakening, we have Nifty Bank, Private Bank, Financial Services. Commodities is something not necessary. Now this I remember very clearly. You'll also remember with me that they were all in the leading quadrant. They all were losing vertical distance, and off late they have started to lose the horizontal distance, which means an erstwhile strong sector lost relative momentum and now is losing relative strength. RRG graph weakening. This graph tells us not a good idea to go long, but if the charts gives you short setup, worth it, you might take a call. This is what RRG is telling us. With that, we come to the charts and we take a look at the Bank Nifty first. Bank Nifty, monthly all-time high, we know all that, not a problem. Weekly had a great run. You can see my state of flow has been exceptionally strong. It is still strong. Do I have any kind of a divergence kicking in here? No. Daily had given us a breakout. Daily had failed the breakout. After the failure, it had consolidated. Ideally, these kind of breakouts should open up on the downside. Rather than opening up on the downside, they bounced back pretty sharp yesterday. This is difficult. To be honest, these are difficult charts to trade. Ideal situation is, unless you have a very strong individual stock chart to trade, best thing to do is to stay away. However, I'm going to mark the Bank Nifty green because I'm going to go by my principal weekly chart, which is strong and actually very strong. Very strong charts do come down, but whether they will come down or not, do I have any signs of that? No, I don't have. But having said this, I will definitely share this with you that especially for the Bank Nifty, keep an eye on these lows. Just in case, Monday, Tuesday, just in case if it slips, then if these lows are broken, then this breakout, failure, bounce back and further down. So I don't see, by the look of the charts, I don't see that's going to happen. But if that happens, so keep an eye on Friday's or Thursday's low, to be precise, this particular one. When we're talking about Bank Nifty, we should quickly talk about the private banks because they add a lot of weightage. Very strong weekly chart. I had a bit of a divergence kicking in here, which made this as the trigger. Did not slip below it. State of flow very positive. I don't have any divergences here to call for a top. Strong weekly chart. Crazy daily chart giving us a breakout, failing, bouncing back, extending again. So yeah, I need to just go with the positivity on the private banks as well. But the monthly chart of the private banks, state of flow is also turning positive, which makes it a really positive chart, private bank. CNX Finance will also give us a similar kind of a feel. Take a look at finance. Now this is where I have to just step back a little bit and be cautiously bullish. My state of flow is gone this week, but I've got a strong trend and momentum. But I have a reversal divergence to deal with. followed by an HAGB, which makes this low, last week's low, very, very critical. Okay, what I'm trying to say is these stretched weekly charts, if they reverse, break down and fall, I don't have that reading from the BankNifty or the private bank or the PSU bank, but I have on the CNX Finance. So I will prepare myself. If I see Monday, Tuesday, all of a sudden everything is falling and I would like to go short, where will I find short trades? I'm going to come here. I'm going to come here and see which stocks is breaking this low. Is this sector breaking this Thursday's low or not? So finance, technically bullish, of course, yes, by the principles, but it is also giving me some contrarian readings for which I have to be prepared on the short side if the breakdown comes. If the breakdown doesn't come, fine, no issues. Right? I'm going to mark it green, but I'm going to keep that back of my mind. Coming to the lagging sectors. Now, lagging sectors are your metals, consumer durables, pharma, healthcare, FMCG. Now, pharma, healthcare are both a lot of overlapping names. We remember this RRG graph very well. Traveling right to left, losing relative strength, losing momentum of relative strength. For a couple of months, it's been telling us it's a weak RRG chart. It's a lagging RRG chart. If price tells you to go short, short it. If price tells you to go long, don't go long. Right? But price has been doing something else. Price has been predominantly on a very choppy but bullish state. It is in a bullish state. It's a choppy bullish state. It has gone through multiple breakout failures. Again, this time the same thing happened. Take a look at the daily chart. It broke out and it failed. Okay, where do we stand? Monthly charts are okay, giving you a 2-month bounce. Weekly charts are in a positive state. I don't have a state of flow very positive. I have a trend positive. I have a momentum positive. I have an HAGB which can give me a breakout on the upside. But I also have a negative trend, a negative momentum on the daily with an HAGB which can give me a breakdown below this. So I'm kind of in a flux. Should I short this? I will say no. My justification is I'm not going to short a strong weekly chart. Okay. So will you go long? Yes. If any of the charts reverses, if the market reverses, if we get a breakout and if we get this reversal, yes. But that yes contradicts with the RRG. And so in the recent past, you've noticed most of the moves have fizzled. So if I look to go long on a pharma name, if back of your mind, I have to keep that 2-3 din bus, that's it. A short-term trade. Right? But I'm not going to go short right now. It will be a cheeky little gutsy over here. It makes sense to wait out a little bit. So pharma, predominantly on the bullish side from a short-term point of view. Pharma's RRG graph is screaming at us for a couple of months. That's weak. Sadly, price is not weakening. At times, TV goes to all-time high. At times, Dr. Reddy picks up. Sun Pharma is weak, so it's all over the place. Just let's stay away from it. Let's see. Let it unfold. Going back to RRG, the next one is your FMCG and consumer durables. Consumer durables and FMCG both are in the lagging quadrant. Both do not have relative strength, and this consumer durables losing both. So not a good RRG chart. FMCG also not a good RRG chart. If you remember last week, we had marked both of them red, negative, right? Because their weekly charts were negative. They were sliding down. Their daily charts were clearly negative. And my daily chart is now in a negative state of flow. However, there is a tiny little positive divergence kicking in, which means going forward, Thursday's low, very important for weakness. Friday's high, very important for bounce back in the FMCG short-term daily point of view. But if I want to flag it, what should be the case? Going by the principle, let's say I go take a look at the monthly or the weekly charts, it has to be red. It's an underperformer, no doubt about that. Consumer durables, what will you say? Consumer durables monthly is also synced on the downside. Consumer durables have given us a solid red icon, which is a negative icon. And if you go by the daily chart, beautiful state of flow on the downside with what I call as a thunder short setup on Thursday. Like the BankNifty, I did mark these lows, remember? And I did that for CNXFINANCE also. I will do the same thing for consumer durables. Consumer durables is clean red. I don't have any second thoughts about it. On the other hand, if these lows are broken, this is where you should look for short. Clear? So where should you look for shorts? Consumer durables, if these lows are broken, very clear signal. And if we see a reversal for the CNXFINANCE, that's one. Okay, so consumer durables and FMCG, not a problem. Consumer durables, we have a setup. Then we move on to the metals. Now metals have been picking up a bit of relative strength momentum, but it's still in the lagging quadrant. It's little off from the relative strength. It's in the lagging quadrant. RRG graph is telling us not a very good chart in terms of relative strength. But when we take a look at the CNX Metal index per se, we find a decent looking monthly chart, a very good looking weekly chart with a thunder setup. So weekly high is very important. Again, daily low is very important. So it's all kind of will turn out to be, going forward next week, it's going to all turn out to be the last week's high-low range. Whether we are going to get a last week's high breakout or a low breakdown. So CNX Metal is giving me a short setup. Am I going to take it? Principle-wise, taking a look at the weekly charts, shouldn't. This is where I would like to make a little exception. Allow me to do that. And why? I have a justification to that. Because the daily chart, trend negative, momentum negative, my state of flow has also gone negative, which is a good thing. It's giving me a bounce back, which is giving me an HAGB, and it's a short setup, number one. Number two, it had given me a breakout. The breakout had failed, it had bounced back, and it's a follow-through move. So it has a bit of more weakness. The daily chart is giving me a little bit of more weakness than what a small cap, mid cap was giving me, right? So I would rather, if I have to take a cheeky short, consumer durables is no problem. BankNifty, the CNXFINANCE below last week's low, the BankNifty below last week's low can be taken. This guy can also be taken because the daily chart is very well established on the downside. Little cheeky it will be because the weekly principal supporting evidence is not there. So it will be interesting. How should I mark this? I have to use a different color here considering the situation that we are in. So I'm not going to mark it red. I'm going to mark it this pink kind of a color, right? Let's go back to the RRG graphs. I think we are done with the lagging quadrants. The last one is the improving. That's where we have IT. Congratulations, after exceptional improvement of relative strength momentum, the index have got itself back to the improving quadrant. Improving is very, very self-explanatory. This is a chart which has improved and can give us further strength. That's on the upside. Price-wise, to be honest, not a very good monthly chart still. Impressive weekly chart and pretty good daily chart also. As I zoom in and take a look at the behavior of the daily time frame, this is not a bad chart to continue to look for long trades. Short, no. So IT can stay positive. The other two sectors which is there in the improving is realty and auto. Auto of course matters. It's got some weightage and it's gaining left to right, down to up. Realty also gaining left to right and down to up. Both the sectors, RRG graph positive. If that's the case, and we come and take a look at auto first, and auto monthly is okay, not a problem. Clearly a breakout zone it has created. Multiple retests needs to be given a breakout. It's given you a flaggish kind of a feeling. This kind of a feeling on the charts in terms of patterns. Trend, momentum, state of flow has improved. This gives strength to the chart, bullish chart. Daily, trendless, momentum turning around, so bullish, definitely bullish. Worth taking a trade if you get this kind of a flag breakout. So definitely a bullish. You can go down to the sector constituent charts and try and figure out who can give you the breakout. Is it the four-wheelers or the two-wheelers? If it's the four-wheelers, then within the four-wheelers, which one, etc. And what about reality? Reality had a great run. The state of flow has started to improve. It had a great run. You can see between this particular state of flow. It's cooling off a little bit. It's cooling off a little bit. Weekly still very much poised. Daily slowing down a little bit. Not in terms of trend, but in terms of over here, the momentum is slowing down a little bit. I had, for the last few weeks, I think I decided too late to go long, too early to go short kind of a view. Principal weekly charts is very positive. I should be looking for, now that it has cooled off, now that the fact that it has cooled off a little bit, if I see a revival, one should ideally go for long trades. So CNX reality should be marked, on the positive side. I'm going to add an extra discussion right now with you. That is, I'll try from next week to add ratio charts to the analysis as well. For example, in the analysis that we did right now together, one sector that kind of very clearly stood out as a negative one is the consumer durables. There's no second thought about it. One sector which is showing fresh signs of breakout or strength is CNX Auto. So what I'm going to do is, going forward from the next week, I'll try and add ratio charts. I'm going to bring in, let's say, the CNX consumer durables, not consumption. This is Nifty. Few sectors are named with Nifty, few sectors are named with CNX, and that creates confusion. So Nifty consumer durable, I'm going to divide that with CNX 500, going to multiply it with 100, and boom, we should get a ratio chart. And the ratio chart has been particularly weak for a very, very long time. Yeah. So that's definitely calling for some weakness. That's no second thoughts about that. I'll try and add these ratio charts. They may make our videos a little lengthier, but nevertheless, it will give us definitely some idea about the relative strength that we discuss in these post weekend discussions, videos that I share with you. So let's go back to the conclusion. Nifty still stuck. 60-40, 60% bullish, 40% bearishness. Last Thursday's low, supremely important for any kind of short-term bearishness. And this low, very, very important for some serious weakness. Upside, of course, this breakout, which needs to sustain. Weekly charts are supportive. Monthly charts are improving. Let's see. Let's leave it to the market. Sector-wise, most of them are positive. FMCG consumer durables continues to weaken. For consumer durables, last Friday's low is very important. FMCG also important, but it's got a divergence. So Thursday's low and Friday's high. So these are the weak ones. Metal is a tricky one. So we have to keep an eye on that. Metal index is low. And another index which stood out with some divergence is the CNXFINANCE on the weekly time frame. So there are a couple of sectors from where you can extract short trades if in case the market breaks down. If in case the market doesn't break down and if it gives you the breakout, my sense is most of them will bounce back. It's better to go with the ones which is giving you a fresh breakout, like something like probably an auto or an energy. It makes sense to go with those. PSU-BANK is also holding well. It's in the leading quadrant. Right? So that's, I think, is enough for this end of the week video with you. Do let me know how these videos are helping you and how you've traded last week and how are you preparing yourself for the week ahead. Thank you. Take care of yourselves. Goodbye. Trade well.